the VA funding fee explained and exactly what you need to know before you buy your first home. So let's get right into it. If you don't already know, I'm Mercedes, the military realtor, and as a service member homeowner that has served in your boots before, I know exactly what it's like, okay, to use your benefits and not even know the full details about it, right? I got blindsided by the VA funding fee when I bought my first home. But look, my whole point here is to save you money, energy, and time through your transaction over and over and over again. People don't realize that you can use your VA loan multiple times in various different ways that are creative. And my whole purpose here as a licensed realtor is to help educate you on these ways. And as a previous service member, I've been through it. And I see every single day service members that I've served with call me up, ask me, hey, how do I do this? How do I do this? And I'm just a free resource. All right, so let's get into it. What is the VA funding fee anyways? Okay, some of y'all may have heard of it, may have not, but now you definitely have. All right, so the VA funding fee is a one-time cost, right? Not one-time total. It's a one-time cost on this loan right here, okay? And what I want you to think about is everyone's pitching in VA funding fee so that there isn't a down payment. Right? So everyone is pitching in together various different VA loan funding fees. For some, they're exempt. So for some of us, we don't have to pay a VA funding fee. But those that do, they're contributing to it, and it basically helps the VA be able to create a program like this and say, look, here's a program, no down payment. Now, I don't want you to get confused. The VA loan can require a down payment depending on how you're using it. If you're using partial entitlement, if you're using it with someone who possibly doesn't have an entitlement, if you're purchasing a property that may require some special push depending on how expensive it is, right? So now we're getting into the jumbo territory, right? So it may not be completely 0% down, but it depends on the loan. All right, so most of the loans, or if you're going to buy a single family residential house and obviously you plan on living in it, there's most likely not going to be a down payment. Now, I don't want you to confuse a down payment with I don't need any money to come to this transaction at all, and we're going to talk about that in particular, that because that right there is very important. It's incredibly important, and it caught me blindsided as well, and we're going to talk about it later in this video, but we'll get to it, okay? So the VA funding fee is pretty much, it's a fee. I just want you to think about it. It's just a fee. Why is this a fee? Because it's a zero down payment program, so they're pretty much just culminating this from everyone else, right? Now, it's not necessarily, they're not taking this money and putting it on a down payment, right? The VA loan guarantees a certain amount of your loan to whoever your lender is. We won't get too deep into that. But look, the VA funding fee, it's a fee. That's it. It happens on every single loan that you pull out that is a VA loan. So because you use it on your first house and then you go to buy a second house, yes, you have to pay the fee on the second house as well. It's not just a one and done total. Okay, now I mentioned before there are some people that don't have to pay any fees and they're exempt. And there are some people where they'll pay this fee, but they may not pay this fee. And we'll get into that why. All right, so let's keep going. Let's keep going here. All right, so who has to pay the VA funding fee? All right, dun, dun, dun. Who has to pay this? Possibly 2%, possibly 3%, right? Which we'll talk about the percentages later. But who has to pay it? Okay, so I'm going to show you the black and white on this. Let me show you. I'm going to show you the exact instruction. I like to be very precise with my stuff here. There you go. All right. So this is the va.gov website, right? VA funding fee and loan closing costs. We'll talk about closing costs at the end, and it's incredibly important. You need to hear this about closing costs before you buy a house using your VA loan. All right, so let's keep moving. Okay, blah, blah, blah. Okay, right here. I want you to see it in black and white. All right. You won't have to pay a VA funding fee if any of these descriptions are true for you. You're receiving VA compensation for a service-connected disability, or you're eligible to receive VA compensation for a service-connected disability, but you're receiving retirement or active duty pay instead. Okay, so that's a little confusing, right? Well, how am I gonna have active duty pay but also have VA compensation, right? If you're not on that boat, don't worry about it. If you don't already know about it, don't worry about it. Those who are going through this process will know. Oh, I'm still active duty, but I got rated. I have a rating that will be ready when I get out for whatever reason, right? If you know, this is for you. If you don't know, then it's not for you. All right. You're receiving dependency or indemnity compensation, DIC, as the surviving spouse of a veteran, or you're a service member who has received a proposed a proposed or memorandum rating before the loan closing date that says you're eligible to get compensation because of a pre-discharge claim. Same like with number 2, you'll know. If this is you, you will know. So if you're in and you somehow get a rating, right, you're going through some medical stuff, maybe you're going to get MedSep, this, that. If you know that, then this applies to you. And those people that know, you'll know. Now this last one, a lot of people have no idea of this one. And this applies to a lot of active folks. And you could still be active duty as well. So this is one to know. Now you're a service member on active duty who before or on the loan closing date provides evidence of having received the Purple Heart. Okay, so tell all your Purple Heart friends, if they're using the VA loan, they should not have a VA funding fee because they got a Purple Heart. All right, obviously it's got to be in their records, their NDALs or whatever, right? NSIPs, whatever program you guys got. All right, now you may be eligible, says right here, for a refund. Okay, that's important to know. So you may be eligible afterwards, right? But it has to be awarded, the compensation. That letter has to be before the closing date. Okay? All right. Now, if you don't get the exemption, you don't get the exemption. Use the VA loan again, and you'll get the exemption with your paperwork, and everything's cool. All right. Now, how will I pay for this fee? A lot of people ask this. How am I going to pay for this percentage, 3.3%, or how am I going to pay for this? Well, you can pay it up front, cash, whatever it is you're bringing, or you can roll it into your loan. All right, see? So right here, you can pay the VA funding fee in either of these ways. Include the funding fee in your loan and pay it off over time, called financing, all right? Or pay the full fee at once at closing. All right, 2 options. That's it. 2 options. Either it can get rolled into your loan or you can pay it, all right? Now, how much is your VA funding fee going to be if you're not exempt? Remember, there are folks that are exempt and there are folks that are not. So let's start taking a look at that. So for all loans, we'll base your VA funding fee on these factors: the type of loan you get and the total amount of the loan, which they'll calculate as a percentage of your total loan amount. Now, depending on your loan type, we may also base your fee on these factors, whether it's your first time or your subsequent. Okay, so I want you to remember that right there. Your first may be different than your subsequent use. So keep that in mind. Your first may be lower or different than your subsequent use. All right, and we're going to look at the chart. Okay, so let's see. Okay, right here. All right. Depending on your loan type, we may also blah, blah, blah. Okay, first or subsequent, great. Using a VA-backed or VA-direct home loan and your down payment amount. All right. Now, your lender will also charge interest on the loan in addition to closing fees. Okay. Please be sure to talk to your lender about any loan costs that may be added to your loan amount. 1,000% lenders, we have to be transparent. Realtors, you have to be transparent. And you want to beat your client to this information first. If there's any changes or any surprises, whatever it is, you want to beat them to this and let them know about a change or something that they don't know really before they ask you, right? All right, so let's keep going. All right, so here's a chart right here. This is an important chart. Remember I said first use, and then this is subsequent, so after first use. All right, first use and subsequent. Now remember, these are all just 3 levels here. If your down payment is less than 3%, 5% or more, or 10% or more. All right, so we see over here on your first use, 2.15. 2.15 is your first at less than 5%. So you can come in with 0% down, and you're gonna, on your first use, and you're gonna put down, or excuse me, your VA funding fee is gonna be 2.15. All right, now if you put more down, then your funding fee is gonna be less. Okay, so it makes sense. Well, it's not a one-for-one comparison of, okay, well then obviously I should put 1.25 down because I'm gonna, or excuse me, obviously I should put 10% down, 10 or more, so I can get the funding fee of 1.25. Okay, we'll run the numbers on the split on everything, right? Because that 10% is going to be a lot more upfront than 0% or 1% or whatever less than 5, right? So run the numbers. There's an equilibrium in the middle, and it depends also what you're coming to the table with. If you don't have cash, if you do have cash, right, that's a variable. Are you able to pay the funding fee up front instead of financing it? Or do you even have the 10% or more to try to even aim for the 1.25? You know what I mean? So this is where I get a little strategic, not a little, very strategic with my clients, because we need to talk about this. This is specific to you in your case. Specific to you in your case. Great, we run everything and we make sense of this. It would make sense for us to put 5% down, and we're not only worried about the funding fee amount, right? Going from 2.15 to 1.25 sounds great to me, right? Especially when we go down to subsequent use. We're over here at after first use, right? We're going up to 3.3 right here. So this would be, after the first use would be the absolute best time to make sure you're putting 10% down, or 5, right? But look at the jump. So this is where it gets a little in depth with math, all right? I'm not going to beat this to death here, but that's why give me a call, give me a ring, send me a DM, and we talk about this specifically about your specific case. But look, we get a little into the numbers here. We can find an equilibrium point that makes sense for your investment strategy and what you have going on. All right, so this is the chart. Don't forget, first use, subsequent use. Okay, first use traditionally is going to be lower right here, 2.15, versus after the first use, your subsequent use is 3.3%. Okay, so these are the tables right here. Now these are VA-backed purchase and construction loans. Don't forget there's other types of VA loans, right? So we have refinancing here. First use, same thing as the chart above, 2.15 and 3.3. Except there's no tiers with the down payment, right? Because it's a refinance. It's a different type of loan, okay? Now we have Native American direct loans. For the purchase, 1.25 funding fee, no tiers, right? And then the refinance is 0.5% for Native American direct loan, okay? And then we have other VA home loan types. We have the Streamline or the EARL. A lot of people call it, right? So this is basically interest rate reduction, refinancing, right? You're trying to reduce that interest rate, right? 0.5 funding fee, right? Same thing as the NADL here on the refinance, 0.5. Something that a lot of people don't know, especially when it comes to VA loans, whether you're active duty, reserves, National Guard, anything like that. If you can have access to the VA loan, you have that entitlement. A lot of people skip over manufactured homes that are not permanently affixed. And look, their funding fee is 1%. Okay, 1%. Now I want us to go back over here and read this right here. If you used a VA-backed or VA direct home loan to purchase only a manufactured home in the past, you'll still pay the first time funding fee. Okay, so first time is 2.15. All right. But over here, you bought a manufactured home in the past. That manufactured right here is 1%. All right. I'm just putting that out there. I'm not telling you to go invest in manufactured homes. I'm not telling you that there's a percentage spread in the VA funding fee. I'm not saying that manufactured homes in high zip code areas may be a great investment because the entitlement cap is pretty high, but the manufactured home price is pretty low, so you can buy more in your entire entitlement. I'm not saying that, but I'm saying if there was possibly a county limit of around $806,500 or more, right? Or more, Santa Barbara, I don't know, or more. Let's say I had an entitlement of 806.5 and I found manufactured homes, right? And they were for 200 each, miraculously with everything out the door. Let's say 200, right? Every year I could buy one and move into it and use up my entitlement. So the first year I'd buy it for 200,000, live in it for a year. Great, let me now buy the next one. And how am I going to buy the next one though? Well, let me take out some equity possibly if I can, if I have any, from the first one that I bought and then put it into this one to possibly pay down points or put money down, right, to get that VA loan funding fee down even more. But for a manufactured home, it 1%, and you can't buy it down anymore. So now you have money, you have equity from the first property. You can put it as money down on the second property, or you can do whatever you want with it. So now we bought two of them. Now that's $400,000 of my entitlement gone. I still have $406,500. Now I keep doing that for the next 2 years. Boom, boom, boom. Now I have 4 manufactured properties in a great area that a lot of people want to live in. That's high net worth. Has the zip code has a high property value there. Making use of it. You got people that are living there. Now you have 4 properties. Anyways, I'm not telling you to do that with manufactured homes, but that is something that I've seen some people avoid. And a lot of manufactured homes are made out of great quality, amazing quality, and they provide what you need for possibly a way smaller footprint in size and also its use. But anyways, let's keep it going. Let's keep it going. And also, hold up, before we keep it going, let me just say one more thing about this manufactured homes thing. There are Chinese companies that make these manufactured homes and will send them over. So with what we got going on right now and this trade war and stuff like that, who knows? Going through America, one of those manufactured homes may have cost you $100K, and then some additional money to put, obviously, get it on the land, get everything mated together, all the septic, blah blah blah, all that stuff, right? And then let's go a little higher. Let's say 200. Let's say 200,000 for just to buy the pristine manufactured home from China. Let's just say, right? Well, with what we have going on right now and these turf wars in China, pretty much backdooring America, saying, "Oh, well, you're going to throw tariffs on us." Well, we're just going to work directly with Americans, and we're going to give them still a crazy discount compared to what you guys mark it up in America. Right? So that $200,000 manufactured home, who knows? You may be able to find a Chinese manufacturer that's selling it to you directly for actually 45K. Does that sound bad? I don't know. It's an option out there. If you guys are interested, take a look. All right, so we're going to keep moving here with the VA funding fee. So look, we've explained what the VA funding fee is. We've explained who qualifies for and who's exempt. Okay? All right, who is exempt is important. Don't forget Purple Heart, folks. You're one of the few active duty folks that can still access the exemption while you're still in. So if you have a Purple Heart or you know someone that's got a Purple Heart, send them this video, tell them to watch this so that they can learn how much money that they're going to saving. You guys saw it. Where is it? Yeah, you guys saw it, saving anywhere from 3.3 on their subsequent use to 2.15 on their first use, right? So send this to someone that's got a Purple Heart so that they could save some money buying their properties while they're still in. All right, so let's keep it moving here. Let me actually stop this projection. There we go. All right, cool. All right, so we also mentioned the different tiers. Don't forget, 5% down or less, 5% or more, 10% or more. All right. First use may be less than your subsequent use. Okay, so this is what I talk about, strategy. We have to stack these correctly, right? If you're going for the subsequent use and you have to pay that rate, you have to pay a 3.3. That's going to be more money on a more expensive property, right? On $1 million property, 3.3% on $1 million property is more than 2.15% on $1 million property, right? So that's just something to think about before you buy, and that's why we talk about strategy and how to stack these on what your plan is. Oh, do I want to buy a smaller house first and then a bigger one or a bigger property? Or do I want to get a bigger property first and then some smaller ones? Or do I want to get a multifamily first, right? And that's why strategy and planning is incredibly important. We have a simple conversation over X amount of minutes or hours, and we really get in depth on what you have going on so we can formulate this plan and then connect you with the realtor in your local area that can help you find the exact property that you're looking for. So let's keep going with the VA funding fee. And look, if there's one thing I need you to remember, I need you to like and subscribe. Hit that like button, hit the heart button, subscribe, follow wherever you're watching, whatever channel you're watching this on, HGTV, BET, MTV, it don't matter. All right, like and subscribe in 5. If you know that reference, you know the reference. All right, let's keep it going. Let's keep it going here. So look, the VA funding fee. We've explained what it is. We've explained who's exempt, right? We've explained the percentages, okay? Now, there's a last piece here that's important that I don't want you to miss, and this actually blindsided me when I was purchasing my first home, and that is closing costs, all right? Closing costs. I don't want you to confuse your VA funding fee with closing costs, okay? They are not the same. So let's go ahead and talk about this. All right. Whoo. Okay. All right. So you have closing costs, title, credit check, stuff like that. You have discount points, right? Discount points isn't necessarily your closing costs. I mean, it's a cost that you need for the loan to buy it down. Let's keep going. All right, let's keep going. So who pays closing costs? When it comes to a buyer and seller, there are some restrictions when it comes to the VA loan that's specific to our VA loan. Now, you may hear a number a lot, and that number is going to be 4%, okay? 4%. They're going to say that we cannot go over 4% of the home's value in seller concessions. Now, there's a difference of what some things may be considered seller concessions, okay? I want you to have that conversation with your lender. If you need a lender, all my lenders are military veterans or active. It's all I recommend, and we know the VA loan in and out and all the details, all right? But I'll leave that specific conversation for you and your lender. Everything is negotiable. I want you to know that. Everything is negotiable. So, for example, if I'm working with you, you're my buyer, right? We find a property, you like it, blah, blah, blah. Great. Before we even get into all that, we're signing a contract together and we're figuring out who gets paid by who, right? So we can try as the buyer to procure my payment, my success fee from the seller, or with the VA actually changing this rule recently. I wouldn't say change it, but they kind of waived it, put an exemption. Or you would be able to pay for it, right? So if my success fee is $1, if my success fee is 1 orange, there we go. I'm gonna say that. I don't like to say dollar amounts with these lawsuits going on and stuff like that. So if my success fee is 1 orange, right, and we have in the contract, hey, the seller's gonna pay me. When we go into contract with the seller knows that. The seller understands, hey, who's gonna pay for what? They know that I've already got it set up where they're going to pay my fee. Okay, now that could change a transaction. A lot of people don't know that when it comes to closing costs. Oh, well, I want this person to pay this. I want them to pay this. There are a lot of deals that fall apart just because the seller doesn't want to pay for this, the buyer doesn't want to pay for this, and no one budges, no one wants to negotiate, and then the whole deal fell apart because of a $45 admin fee, over some paperwork, right? And that's what we don't want to do. We want to have these conversations and know who's going to pay for what. Now, when you enter a transaction, you may not completely know. But I'll tell my clients if I'm working on the buy side, hey, I'm going to try to throw everything in the kitchen sink. I'm trying to get every concession that I can get that you allow me to pursue, though. Because with negotiations, your realtor could push a little too far, and then that fish gets away. That one that you really, really wanted because of XYZ, it got away. So you have to know what to negotiate for and what to fight your battles on with these closing costs, with these additional fees when it comes to the buyer and the seller. And when one day you're in the seller's seat, you'll also see the other side of, oh man, this is what we were doing, right? On the buy side, this is what we were doing to the seller, or this is what the seller was doing to us, right? And you get to see both sides. And it's a tug of war, it's a pusher pull, but it has to be a win-win for both sides, all right? And that's always the aim. So let's talk about these closing costs. So you, the buyer in this case, and the seller can negotiate who will pay closing costs like the following. So we have commission and fees for your real estate professional, which is what we just mentioned. We have the loan origination fee. Now for VA loans, VA lenders, there's usually a blanket 1% fee. Some would say it's an overlay, whatever it is, but it's a loan origination fee that a lender would have. Now an overlay, that's some other fees that a lender may have on top of everything else. So ask them that as well, right? You'll ask them, well, hey, what's your loan origination fee? And they'll tell you it's most likely it's 1%. And then ask them, do you have any other overlays? And they may have a 0.5, or they may have some other stuff that's on there. Something to look at. All right, let's keep going. Loan origination fee. We have loan discount points or fund for temporary buy downs. Okay, so your seller can provide a concession to pay for these discount points. So hey, I want a 2-1 buy down, or I want a 3-1 buy down, right? You're buying down a certain amount of percentage for a certain amount of time. So it may be, hey, we're going to buy down the rate this amount for this percentage for this amount of time. And then next year, it's going to go to this amount for this amount of time. And then the last year, it goes back to normal, whatever your normal rate was. If your rate was 6%, right? So it can step up from 4, 5, 6 all the way to the ultimate amount, or it could go from 5 to 6, but they cost different amounts, right? So if you're buying down bigger, the buy down usually costs more money to buy down. Now you can negotiate to have your seller pay for this buy down. So don't forget that. All right, credit report and any credit balances or judgments. We have the VA appraisal fee, hazard insurance, and real estate taxes. Okay, so don't forget about those taxes. A lot of people forget. You can have the seller pay for back taxes, for future taxes, right? Hey, I want this, and I want to throw in escrow. Insurance. Hey, we're gonna pay the insurance for the whole year, right? Almost anything is negotiable. Just ask. All right. We said hazard insurance and real estate taxes. We said state and local taxes, title insurance, and recording fee. Okay, so all of these things can be negotiated, and I would 1,000%. Now, if you have a property that you really, 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 really want, don't negotiate. Like, if you really want this property, and please, when you ask, which you shouldn't, but if you ever get into this situation, don't ask anyone, well, what are they willing to take for it? You know what the answer is? I think you're going to know what the answer is. If you were selling your place and you listed it for $800,000 and someone asks you, what are you willing to take for it? What are you going to say? You're going to take what's listed. Okay? So don't play these games. Well, what are you willing to take? Write the offer. The offer will go to the realtor. The realtor presents all the offers evenly, as fairly as possible, to their seller, to their client, and they'll go from there. And the realtor may call you back. The realtor may not call you back if you have a really disrespectful offer. They may not tell you to counter. We don't even care about that offer. All right. So look, everything is negotiable when it comes to closing costs. Do not confuse your closing costs with your VA funding fee. Your VA funding fee can get rolled into your loan, or it can get paid up front. Your closing costs have to get paid at closing. They cannot get rolled into your loan. Don't forget that. All right, let's keep going. Now, can the seller pay for my closing costs? The answer is yes. Everything's negotiable. Now, let's see. Home sellers and builders can offer credits to cover some or all of the buyer's closing costs. Now, they don't limit credits for a loan's closing costs, but they do limit sellers' concessions to no more than 4% of the home's reasonable value. Now, the reasonable value, where are you going to find that, right? Well, what's the reasonable value of my home? You can find your home's reasonable value in the VA notice of value that your lender provided to you. All right? So your realtor and your lender, they both need to know the notice of value. They need to know how much numerically that 4% comes up to so that they can negotiate for all of this amount, right? Whatever that number is, whatever that 4% is, that's what I want to go for, maximum, right? I'm going for the number, not necessarily each individual cost. I'm trying to get that 4% regardless. Even if the costs are only $5,000, I'm going to find a use for the rest of that 4% that isn't the $5,000 somewhere, right? Wherever we can use it. Now, people would ask, well, how much are closing costs? Well, they vary. They vary depending on the title companies that you're using, the lenders that you're using, right? So that's why I always tell people shop around. If you got a rate, you got a quote from a lender, from a title company, great. Let's shop around. I've got others we can reach out to, right? If you're like, hey, I want to take a look at others, no problem. You don't got to go ask someone else. I will provide you a different lender at a different company and a different title company that you can get your quote at, all right? So they vary by your local area. I'm not going to say obviously, but most likely costs may be higher in a higher property value area than not. And don't forget, you can also use companies that are not located in that state. You can use a title company in a different state as long as everything's good to go on their part. But you can use a East Coast or a West Coast or whatever coast company, right, to run your information, to run all the admin tasks that needs to get done for title. All right, forget that. There's a one note here that I wanted to read. So, seller concessions are anything of value added to the transaction at no additional cost to the buyer, right? Concessions include credits for the VA funding fee, debt payoff, or repayment of the buyer's hazard insurance. Okay, so look, the seller may pay for the VA funding fee, which you may not want to roll it into your loan. You may say, no, that's another, I want that paid too, right? Debt payoff, so you may have credit card debt, whatever it is, right? You can use it to pay that, or prepayment of the buyer's hazard insurance. All right? So the more you know, don't forget it. Don't forget it. Save this video because you're going to need this when it comes to home buying. And you should watch this every single time you're going to buy a property. It doesn't matter if you're already in a property and you're looking to sell this one and buy another one, or you want to do a 1031, or you want to keep this one as a rental and buy another one. Watch this video so you're refreshed every time you're using the VA funding, the VA loan, which has the VA funding fee. All right, let's keep it moving. Now, can I finance? This is the part I was telling you at the beginning. Can I finance my closing costs on a purchase loan? No. On a purchase or construction permanent loan, you can only finance the funding fee into the loan amount. You must pay off all other fees and charges as the loan closes. Okay, so here's the ultimate scenario, right? We're kind of gonna walk through some of this. All right, we're gonna do, this is off the top of my head. All right, no whiteboard, none like this. All right, you're active duty service member and you're transitioning out. Okay, you're transitioning. You know your EOS, your end of service is, let's say, in a year. Let's give you that amount of time. Let's say it's in a year, and you know you're gonna get out, and you know you want to buy a property, right? Now, number one issue that kind of doesn't relate to this funding fee, but I see this a lot in transition. Look, you're about to quit one job, possibly get into another industry or not, right? So you have a big break right there. Lenders don't like that. They don't like you switching jobs. They don't like you having a change of income, right? So I talked to a lot of people. You may want to purchase a property before you're getting out. A lot of people will do their 4, 5, 6 years, however many years, but they'll wait to buy a property until they get out for some reason. This is where I'm settling down for now. Let me finally buy a place. Okay, not the best move because, like I just mentioned, you're switching your occupation. You're having a possible change of income. You know, you may have a job lined up, but you're not getting that pay yet. You know what I mean? So you get out in October 1st, you're separating, right? Well, did you get the job yet? Did you get pay stubs yet? Do you have work history at that new place? Most likely, no. Okay, so that's a concern when it comes to lenders. So sometimes I will advise to try to purchase that property, or a property at least, way before you're transitioning out. You should have a stack of properties before you're getting out. Okay, so now let's get to the transition. You hit the transition, boom, you're out. You're starting to get your VA disability pay. Perfect. This is great. Let me now apply, right? I want to move forward and actually get a home. So I want to apply and I want to get pre-qualified to get a house, right? You want to make sure you're communicating to your lender. I want to use a VA loan. And number two, I'm a disabled veteran getting paid by the VA, blah, 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 XYZ. Show them your stuff, because there's a special code that's going to go on there, and that code needs to be on there. So they pull up your entitlement. They see, okay, you have the code, you have full entitlement. Okay, great. Let's get moving. Okay. So they're going to put this funding fee, like we said. It could vary, depend on if it's your first use or your subsequent use. They can tack it onto the loan of the home that you purchased, right, on that home loan, or you can pay it up front. So let's say the funding fee is $5,000, right? So you're going to need to pay that going into this loan, closing out the loan. I have to pay this funding fee. Now, a lot of us may not have that money on deck. We haven't even mentioned earnest money. If you've watched some of my other videos, you know what earnest money is. So your earnest money as a buyer is pretty much good faith money you're putting on the transaction, right? It's not money down. It's not going towards your loan. It's not necessarily going to the purchase price of the home, but it is while we're under contract, right? Once we put in an offer and it gets accepted, they're going to ask for an earnest money. They may, let me retract that. They may ask for earnest money deposit. And it could be $1, it could be $10,000, could be $50,000, could be whatever it is, right? It's up to their discretion. So let's just say it's $2,000 in this case, right? This is where I ran into this pitfall when I bought my first home, where I thought everything was 0% down, no money down, and we're under contract, we're in this stuff, and then my realtor was like, hey, we're under contract, congrats. And I'm like, yeah, what's up? This is great, this is awesome. And he's like, okay, well, I need the earnest money. I'm like, the who? Who's earnest? Who's being earnest around here? Like, and then I realized, okay, I have to come up with this money. So I was able to scrounge it up. I believe I used some credit cards and maybe some savings, and I was able to put it together. And it's good faith money that goes on the contract. Okay. Now the title company most of the time holds on to this, right? And it's not that it's going to the seller and they're cashing it and they're going on vacation. No, look, they're just holding on to this money. And it's good faith money for the contract while we're under contract with the seller. Because it's taking time, right? We're taking their property off market. We're doing inspections. We're doing this, right? They don't want us to come around and pull their legs. You know, every Joe and Sally that comes to the open house that's got $1 wants to come and put in an offer, and that's not how it's not gonna work like that. So if you don't get earnest money in, the contract can drop dead, and they're gonna say, okay, we're not gonna move forward with this. You can't even provide the earnest money that we're requesting at the correct time. Okay, so why is that important? Okay, so when it comes to the funding fee, can you pay it up front, or can you roll it into your loan, or can you have the seller pay for it? Okay, so the loan is 0% down, the actual loan. Earnest money, you still need to come with, you may still need to arrive with earnest money. Okay, that may be, who knows, maybe $0, it may be $2,000. Next, that funding fee, we need to make sure that that is getting paid by you up front, or it's getting rolled into the loan, or we have the seller giving a concession for it. And let's not forget that 4%. We want to maximize that 4%. And then you can go a little bit over that 4%. The verbiage here is varies. You have to really get into the instruction, but there's like, oh, it's 4%, but then these other things don't count towards closing costs. So they could pay those too, but I'm gonna leave that up to you and your lender, or if you ever give me a call. Okay. All right. So I need you to know the difference. VA funding fee is not your closing costs, and your closing costs have to get paid. And we just mentioned earnest money. So this is where it all connects, right? So great. We put in an offer. The offer gets accepted. We're under contract. Amazing. All right. Funding fee. Let's say my realtor. I'm not even gonna say that. I'm your realtor. You're the buyer in this case. I'm your realtor. You have me, or I tell you whatever it is. I'm gonna negotiate to get your VA funding fee paid by the seller. Right. Seller pays your funding fee. You now have closing costs. For some reason, let's say we weren't able to negotiate closing costs. So your closing costs are miraculously $2,000. Exactly, $2,000. Now you have your earnest money that you gave to title for $2,000, right? Now you have your closing costs for $2,000, and your closing costs can't get rolled into the loan. They could have been paid by the seller through a seller concession, but in this case, we couldn't get that seller concession for whatever reason. So now your earnest money, you can take that and exactly apply that to the closing costs to zero it out. Boom. All right? It's not money down. That's money to pay closing costs. That's not money down to buy down the loan. You got that right? We're not, if this is a $500,000 house, that $2,000 isn't going to make the $500,498. What it's covering is your closing costs, which are a separate X amount, which in this case is $2,000. So don't forget this going into a transaction, right? This doesn't mean that you need a bunch of money saved up, you need all this stuff, and that the VA loan is not 0% down, and it's BS and blah, blah, blah. All that. Look, relax. It's okay. We will figure it out. But we need first to know your intention. I need to know that you want to buy a house. Okay, you raise your hand. Okay, you want to buy a house. Okay, then we'll talk about, well, what kind of house, right? We'll talk about criteria. We'll talk about what your finances look like. We'll talk about what your investment strategy is. You may still be serving, so let's also talk about where you may PCS in the future and what that looks like. And your investment style, because that leads up to what type of property are we looking at? Are we looking at a 4-unit upfront, because you can buy a 4-unit with your VA loan, or you could build a new 4-unit, 4 brand new units, new construction, or you could build one big old house. You could manufactured. You could do whatever it is you want, right? But we got to have these conversations and identify the strategy and where we're going and what is it that we want, right? We may not have all the answers right now, but what we're doing, as many of y'all know in operations and mission planning, we're doing the best with what we got. We got weather right now. Okay, that's the best that we got. But we know that a lot of times right before it's time to go, that weather comes in and ruins everything. We got to cank the mission. That's it. You know what I mean? So we're doing the best with what we have, but we have to identify these things. That's why when I talk to clients, I want to hear, what is it that you want? Let's refine that. And let's think big. Let's think as big as we can. I don't want you to think so small and have this scarcity mindset, right? We need to think abundant. What is it that we can get on the first go, right? I have a client in Georgia, and she may be watching this. I have a client, a possible client. Look, I'm going to say a possible client. She knows who she is. She's interested in buying a 4-unit, a multifamily. So we had to have the conversation of, okay, well, let's take a look at your finances. How much money do you have up front? You now know that you need 6 months of reserves for a multifamily. So do you have that? Plus earnest money, right? Plus finances and credit and everything else, right? So these are all things we have to consider, but doing it by yourself is extremely overwhelming, and you may not have all of the information, right? So we talk for 30 minutes, an hour, however much time you need to really help formulate this plan that you got going on, right? And it could be anywhere. You could be in Washington State. You could be in Florida. You could be up in New York, right? Whatever it is, it doesn't matter. Give me a call, give me a ring, and we'll talk about it. And I could put you in connection with my lenders that are all military veterans or active, and we get real in depth on the VA loan and get this strategy out, right? Even for your first simple single family, let's have the conversation to get your strategy in place, because a lot of times people, they'll jump ahead and they'll get properties and they'll maybe get them in the wrong order, or they'll get the wrong property types, and then they're kind of locked in this way where they're not able to maximize their VA loan. Okay, and that's what we want to do, is over your career and your life, maximize it over and over and over as much as possible, leveraging it. You know, it's your right. It's your right, it's your privilege, it's your entitlement given to you for your service. So use it. Use it to create wealth. The easiest path to become a millionaire is through real estate here in America for now. For now. Okay? We have home ownership possibly decreasing, right? So imagine in 40, 50, 60 years when your kids and your grandkids are saying, thank you so much for buying this property for us, and passing this down, you know? And not just necessarily giving it to them for free, you know, make them work for it, till the land, whatever it is, right? But you're leveraging time now. And that property could take care of you later. We don't even have to necessarily think about your kids and your grandkids. That could be enough money to support you till the end of days. You know, I know a lot of us that are watching this are military veterans, and some of us may be receiving disability payments. And I ask y'all, do you think the government's going to take care of us for the rest of our lives? So with that, we have to invest now. Whatever we get, we have to invest it. Real estate, business, stocks, and finances, right? Crypto, right? Business, you could buy a laundromat. You could buy an RV park, right? Real estate, obviously, RV park, pads, whatever it is. But we have to invest our money over time to make that $1 into 10 over time, though. Instead of holding on to our dollars so much, so close, you're not going to end up with more dollars. You're going to end up with less due to inflation. Putting all that money under your mattress, and inflation is just eating that up like Pac-Man. That's why we need to invest, so that our money is growing faster than the rate of inflation. That by using the VA loan with strategy, just like this, using the VA loan funding fee. As we covered, you know, your first use with less than 5% down is 2.15 a VA funding fee, versus your subsequent use, that's 3.3. That's more than a point higher. Right now, if you don't know what you're doing, you're just going to buy whatever you want to buy, and then realize later, oh shoot, I was only able to use my VA loan to buy one property. That happens to a lot of people, right? The county limit is $806,500, and they buy a property and everything comes out to $800,000. Congrats. You got a single family with 3-bedroom, 2-bath, beautiful, beautiful, modern, up-to-date, great area, but it's one property, right? I have the investor mindset. Now, you may not want to even care about investing, and that's okay, but we have to have that conversation. I need you to tell me, no, I don't care about investing. I just want a really awesome property for me and my kids, and this is what I need, and that's it. Perfect. You said it. You acknowledge it. You're aware of it. Let's move forward. Now, if you tell me, oh, hold up, I didn't think about it like that. Okay, let me talk to my partner. Okay, let's do this. Are we okay with house hacking? Are we okay with maybe living in a multifamily and then we rent out the other units? All conversations we have to have. They're not just simple, oh, just buy one house. Nah, you know, we could have you move out of the barracks, get a 5-bedroom. Now you're renting out 4 other bedrooms to your buddies, charging who knows, right? I don't know the area and the property type and stuff, but let's say your mortgage on this house is $4,000. That's high, let's just say, but let's say it's $4,000 on a 5-bedroom place, and you're charging 4 others, right? And let's say you charge them $1,000 miraculously, $1,000, right? You're breaking even almost. We're not going to get too into the weeds, but that's the point. Is we need to leverage things like house hacking, things like ADUs, things like short-term rentals, mid-term rentals, long-term rentals, right? Even just renting out a garage space. You may have a detached garage and someone may pay for it. So we have to think of how we can leverage this real estate to make us income at the end of the day. Right? We want to be free. What is that number? What is your number to be free? Right? How much do you want to make every month, every year? And we need to then leverage real estate, business, stocks, and finance to get to that point so we can truly retire, or you truly just do what you want. You don't realize how many people I talk to and they want to get out and go contract straight out the military and go do this, XYZ, without realizing, hey, look, with your pension and your disability and maybe some of your other passive investments that you put in when you were younger, actually you're bringing in K a month. You don't need to work. And that may change your mindset. That may say, oh, now I can spend time with my kids or my grandkids, or I can go volunteer at the YMCA, or I could go hang out with my buddies that I serve with, or I can be of service in a million other ways, or you can be of service to yourself, finding out who you are, right, outside of the uniform, right, really exploring that. So I beg you, invest early, especially while you're still serving. And if you're out, that's okay. The best time to plant a tree was 20 years ago, and the next best time is now. So we just got to get started now. And you can send me a DM, send me a message anytime, or you can go to my website, themilitaryrealtor.us, themilitaryrealtor.us, free guides, free calculators on there. You'll find my phone number on there. You can send me a message, send me a text, give me a call. I'll get back to you as soon as possible, if not right there. And let's talk about what you got going on. Whether that's career-wise, you're transitioning out, or you're just going to another unit, you're PCSing, you're thinking about re-enlisting, you don't know if you should re-enlist, you don't know if you should take these orders, whatever it is, give me a call and I can possibly help you out, and if not, connect you with someone. You know, I had a buddy who had some questions about flying on the airlines, and he wanted to transition to this, and I was like, well, I know another pilot that was in our unit that is flying airlines. Why don't you want me to connect you, and y'all can talk about it? So we need those types of connections, especially people that are in, people that are out, and everyone else in between, right? National Guard, reserves. No, I'm just kidding, y'all. Relax. Don't kill me in the comments. Reservists, National Guard. I'm here with y'all. Y'all come help us when, you know. But look, that's the VA funding fee explained from A to Z. All right, here are some key points. Number one, make sure when you're talking to your lender, they know that you want to do a VA loan. And number two, you're a disabled veteran. So we need to make sure that that special code is on your entitlements when they pull your COE, your certificate of eligibility. And I have a full video. Y'all can check in my videos here. I have a video showing you how to pull your COE yourself on va.gov. So number one, let your lender know I'm VA, disabled. This is what I want to do with it. Okay, great. Two, talk to your realtor about strategy for everything, about the whole transaction. Who's going to pay for what? Hey, I want to talk about concessions. You know, this is what I want to do. If we get this property, this type of property, blah, blah, blah. Let's always have the conversation about concessions. And to me, the conversation should be, hey, I want the sellers to pay for max, pay for everything, pay for this air in this room. Whatever it is, I want the seller to pay max, right? And then we negotiate and we figure some things out. Realtor, they need to know how to negotiate, and also they may have more leverage depending, but before or after inspections, right? Inspections is a good time to find a lot of stuff to say, add them all up and say, hey, that looks like $20,000 worth of concessions to me. What do you guys think? And you may be able to get it. You may not. Depends on how your realtor negotiates. Depends if the sellers are under distress, if you're under distress, or if your realtor, that realtor knows certain things about each other. But that's for them. Okay, so number two, talk to your realtor about it, right? Make sure that they know you want to get as many concessions as possible, and your financial picture of what you have available in cash, because that is very important. We don't want to get to the closing table and then we're extremely tight on money, or we just don't have it at all, and then we have to. Sometimes some realtors, they'll take a haircut on their commission, but that's neither near nor there. All right. The point is, we want to have the conversation with your realtor beforehand. Hey, this is the strategy that I want, and let them know too on whatever properties. They'll know. I'm sure they'll have this conversation with you. But like we mentioned before, certain properties you do want to negotiate on, some you don't. If you run the risk of losing that property, it's off a negotiation, off of a $40 or $50 negotiation, or even $1,000 or even a $10,000. The value of that property is within you. So just know that when it comes to negotiating, you don't want to negotiate. It's like you're dating someone and you're pushing their buttons so far just to see how far you can get away with, and then they leave, and that's not what you wanted at all. Okay, so you got to be very calculated with that right there. And number four, send this video to anyone that qualifies for a VA loan. Like, come on. That's the number fourth one. Send this to anyone that you know, active duty, reservist, wasn't in your unit, who cares, right? Send them this video so that they can get educated and they could hopefully If they're exempt, save thousands of dollars on their next VA home loan purchase. Okay, so don't forget it. The VA home loan, and this is the funding fee. Okay, please, when you talk to your lenders, let them know that your VA and you want the VA. I heard a story recently of this gentleman saying like, yeah, I went and I tried to get a loan and they told me I needed this amount percent down and blah blah blah. And I'm like, did you tell them you were getting a VA loan? And he's like, I didn't think I had to. And I'm like, yes, you have to. You have to explain to everybody, every single point. You have to remind them over and over, hey, VA, disabled VA, make sure that funding fee is waived up, right? We have to be specific. So make sure you're working with someone like myself, as a previous service member, and knows exactly what you've been through, going through your boots, and also a lender that has served before. Because we know there's a lot of groups out there, a lot of organizations out there that are we support military, we support veterans, all this stuff. Well, none of them are owned by military, none of them are owned by veterans. Please, I beg of you, work and choose military and veterans first when it comes to business as best as possible. Whatever you do, right? We got a lot of service members that are homeless, that are struggling, and could really benefit from your business, whatever it is. If it's plumbing, if it's janitorial, if it's cooking, if it's administrative, if it's attorneys, whatever, try to work with military and veterans first. Now look, spouses, I love y'all spouses. I love y'all. Please don't kill me in the comments. I pray to y'all. Please. But look, y'all come behind veterans and active duty. I'm gonna say when it comes to an employment, choose a veteran first, right? DD 214, if you need to ask about their experience, blah, 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 whatever, try to verify. Active, put them first. Our service members that serve should not be getting out and not having assets, not having any type of properties, not having any types of savings, right? And they need help. All they need is you to possibly share their work one time or do business with them. Choose them one time. Just give them a chance and whatever it is. And sometimes they suck, man. Sometimes, but that's all people. So give people a chance and whatever it is. But look, if you got any questions about the VA funding fee, just send me a DM. I'm always here. But y'all know it's about that time, okay? Please drop a comment below with your thoughts, or if you have any more questions about the VA funding fee at all, or closing costs, or any other thing about the VA loan. And let me know what other topics you want me to cover. All right, I'm here for you. I'm here to serve you. I only make content for y'all. If y'all weren't here, my friends that also served, I wouldn't be making this content. So let me know what you want to make. And when you're ready to start your real estate journey, not if, when you're ready, go ahead and visit themilitaryrealtor.us and you'll find free guides, calculators, tools, anything and everything, especially about me as well, on that website. You'll also find my phone number, so you can send me a text or give me a call or schedule an appointment. Use the calendar, schedule an appointment. I'm here for you, okay? So please take care, God bless, and don't forget that ownership is freedom. All right, y'all.